tremendous. Couldn't be better. Sunshine, freedom, capitalism, the holy trinity of golf.
I appreciate the invite, King Don. I can't believe you're making me wear this hat in order to access this golf course, though.
It's called a dress code. Very exclusive, very classy. Nobody, and I mean nobody, steps onto my fantastic course without a great hat, beautiful hat. And frankly, people are saying it's the greatest hat ever.
That's great, Mr. President. Very happy that you love your hat, but can we talk about allowing everyone to access this course for free? I'm a big proponent of free stuff.
Free golf! Can you believe it? Free. We're going to give away free golf, and then what? Then they'll want free caddies, free burgers, free sunscreen. It's a disaster. People in flip-flops. Can you imagine? Flip-flops saying, "Where's my stimulus sandwich?" It's a disgrace, a total disgrace.
Well, it's about fairness. Maybe we can open a hotel nearby to house some more migrants free of charge.
Fairness? Let me tell you, fairness is when I win, and I win bigly, okay? By 20 strokes. That's fair to me, and frankly, that's the only thing that matters, believe me. Watch closely. This swing's been rated #1 by every reputable poll except CNN. Biggest drive, the biggest, believe me. You've never seen anything like it, maybe ever. In the history of mankind, you hear me, Kami?
Wow, that's really impressive.
Of course it is. We don't do weak drives here. We do America first drives. Tremendous torque, believe me.
Okay, my turn.
Oh boy, straight into socialism or maybe communism. Get it? Because you're a communist, I'm going to call you Kamdani.
It was an accident. I didn't mean it.
Accident? Where? I don't see Gavin Newscomb here.
Hey, maybe we should slow down a little.
Slow down? See, that's the problem with you, Kamdani. That's why I'm great and you're not. I speed up, you slow down. I build towers, beautiful towers. And you fill them up with migrants.
I build movements, not monuments.
Yeah, well, my monuments have better bathrooms.
Oh, shit. I love
Get
Baby
him a helmet,
Trump.
Folks.
See, I could never trust you.
I love Baby Trump, and I love these kind of things. They're hilarious. Good morning, everybody. I know there's been a lot of fear in the market. We'll talk about that, and we'll talk about whether or not it's short term or whether or not it's long term. I do think that Wednesday will be another good day once Nvidia has earnings, but we also have people like Peter Thiel exiting their entire Nvidia position, and half, I think, of their Tesla position. Still holding it as the largest position. But again, when you got billionaires moving to cash, you do need to take a closer look. Let me real quickly. Oh, it looks like I'm missing my ticker for Bitcoin in the bottom corner. Let me just add that super fast. And I do still think this. Let me move over the price too. It's a little off. I do still think this. I think that we've overshot the megaphone pattern, so that's blown out now. On the weekly time frame, we're past the 50, which normally again has marked the end of the last two bull markets. So there's a lot to think about. We're not in an environment where you can just be like, I 100% sure know what's going to happen over the next month, 2 months, 3 months. This is why I've been saying for, I think, at least 2 to 3 weeks now, somewhere around there, to get out of 2X funds and to reduce exposure. Probably 2 weeks. That's probably more fair. Maybe a little less, at least in regard to the long calls. I was selling out of my Clean Spark calls. Wish I would have dumped all of it. Wish I would have dumped all the Mara and just gotten to safety. But woulda, coulda, shoulda. I didn't expect that we'd drop 25% with Bitcoin in 3 weeks. That just happens sometimes. So I want to start off here. We're going to start off with the Doom. So Shinaka seems to be newer to this space, but I found this riveting. They have a post that has 1.5 million views, 9,400 likes. It's from 11 hours ago. It's talking about Japan. It says Japan just killed the global money printer and nobody noticed. So first off, Japan is printing massive amounts of money in order to be able to fund their economy. And they just did another big, QE money printing experiment here just in the last 24, 48 hours, which is why this post probably appeared. What I find fascinating about this is, okay, so the global money printer and nobody noticed. The most dangerous number in finance right now, 1.71%. So I'm going to give my 2 cents here in a second, but I want to just read through what he has to say. Japan's 10-year bond, highest since 2008. Here's why your retirement just got obliterated. These are very strong words, very inflammatory words. And the fascinating thing I find about this is if we look at the Japanese 10-year, yeah, it's been going up. It's actually not much different than where it was in March of this year. So exactly what has happened to completely destroy the world economy with Japan? Well, let's just keep looking. For 30 years, Japan printed money and infinite money at 0% and exported it worldwide. Okay, that's true. That's true, right? They had lost decades. They got down to 0%. That's why we have, if we jump back over here, that's why we have this big trough down here of craziness, right? Where all the way from 2016, February 2016, all the way more recently until about August of 2021. Again, when the Fed started raising rates at the most aggressive rate in history, it made Japan have to get rid of their 0%, where they were just kind of meandering and floating. Japan actually had an issue where they couldn't create inflation. They were desperate to do it. However, they are indebted too. And again, this is rising. But if you just look over here, guys, like, I don't know, if we get up here to if we break 2%, that's probably going to be something where it's a little more interesting. Where I disagree with this entire premise of this post, well, a lot of it, I'll just keep reading through it and then I'll talk about that. For 30 years, Japan printed money, infinite money at 0% rates. All right, so for 30 years, Japan printed infinite money. Infinite money at 0%. So they didn't go down to zero until February of 2016. But this post is saying that for 30 years, this happened. So I'm already finding some interesting discrepancies here. And I don't know if this guy is a bot, just running AI. I don't think so. I think he uses AI. But this is just a huge gaffe. Like, this is insane. He's saying the bid disappeared. Again, it hasn't changed much since March. He's saying the Japanese yen carry trade unwind. Everybody I know who's worth their weight in salt, including people like Lynn Alden, will tell you that the Japanese carry trade already unwound and there really isn't much of one left. And you can read through the rest of this, but it's like December 18th, the Bank of Japan meets 50% chance they hike again. If they do, sell everything, not nail down. Wow, that's a pretty broad statement. Your 401k doesn't price this in yet. The Fed can't stop this. No central bank can. The world's biggest piggy bank just cracked open and the money is flowing backwards. Position accordingly or get destroyed. So one of the things he talks about up here is that they're selling all of our treasuries and our 10-year is fucked and like everything is fucked. And again, this is really popular right now, and that's going to be kind of a theme for today. But when I look at the 10-year, so yeah, the Japanese, if we look over here, they did print just a bunch of money, and it went up 2% in their yield. That is a lot. That's true. But if we look over here, on a day where people don't trust the Japanese bond market, we're actually seeing the U.S. 10-year drop 0.55% and start to do better. So, I don't know. A lot of things about his post just don't jive, but it's very popular. And that's kind of where I wanted to start today, is how popular it is to think that the world is falling apart. And so again, Swiss said this needs some serious value or evaluation. And I said, I mean, Japan's bond market broke a long time ago, and they're literally printing a bunch of more money. And yes, yields will go up. So, yeah. He's a doomer bot. I unfollowed him. He's a bot, right? I'm pretty sure he's a bot. And I don't know. I just don't. There are some topics like crypto and stuff. I'm going to do the same. There's some topics like crypto and things like it where it doesn't make any sense. Like what it says is like a big chat GPT dump, but it's not actually heartfelt. It doesn't have any semblance and reality. Again, saying that there's 30 years of Japanese money printing with 0% rates is pretty fucking weird. It's pretty fucking weird to say that when in actuality, it was just from 2016 to 2021, right? Like, that's pretty weird when it's 5 years, not 30. You'd think a human being would have caught that or double-checked their research. Ryan Detrick said, S&P 500 gained 2.4% during the longest government shutdown ever, which is quite normal to see gains during shutdowns. What is also normal is once things open back up, stocks do pretty well. S&P 500 higher a year later, 19 out of 22 times, and up better than average, 12.7%. Okay. And then he said, when you see the amount of freakouts we've been seeing on Friday AM lately, it tends to end with a higher Monday. Can it happen again tomorrow? If so, it'll be higher 11 Mondays in a row. So what he's talking about is Mondays are the good days. If you look here, Monday and Wednesday are the best days. Thursday and Friday are gruesome. That's that's been true, just statistically true here. And 11 Mondays in a row, we've went higher, which is fascinating. Let me look at chat real quick. I'm going to increase the size. I haven't really said a proper good morning to everybody. MicroStrategy dumped hard, trading back down near the low 200s. Yes, it did. It actually, it was under 200 on Monday, and it could go lower. I mean, this thing's been beat up. I said to somebody earlier, though, it's still up 1,400% from the bottom of the bear, almost 3x better performance than Bitcoin this cycle. So if you bought that thing at the bottom and you didn't rush to try and catch up to it, like a lot of people did, and partially myself, you did well. So everybody wants to shit on MicroStrategy. Everybody wants to shit on Tom Lee. It's just how things work. And then later they'll be like, "You're a god. You're so amazing." And I always knew that you were right. Even though those same people will have again done that. Now we do need to talk about risk. So corporate loans, low quality debt. Now this is split B to CCC rated loans are not doing well, right? So this might be some of the reasons we have SOFR spikes. If you look into September, you can see how these things were not doing well, negative all the way to 10%. So it's showing that the riskiest loans have been under pressure. It doesn't show that, though, even though there's been pressure since, again, like late April here, or I should say mid-April. You can see where these things started to feel some pain. And that was when the tariffs kicked in. You don't see that in higher quality loans, but you do see it here. So again, I just want to touch on it. I don't want to just give you optimistic shit all the time. I want you to know where there's cracks too, or where things don't look as good. Kenny said, whatever happened to the market structure bill? So I don't know if people realize this, but when you have a government shut down for over 40 days, you don't work on the market structure bill. You can't pass things when the government isn't open. So they're still trying to get it done by Turkey Day. They're also, I don't know if people realize this, but our trade agreement with China was never finalized. So there's some people that are the doomers that are saying, oh, hey, we're not getting the soybean deal. They're not doing anything that they said they were going to do. They're still going to lock down rare earths. It's like, bitches, the deal isn't done yet. If you listen to Scott Bessent, just like the market structure bill, they're trying to get it done before Thanksgiving. Thanksgiving is coming up in about a week. So just remember stuff like that too, okay? Wyatt Smith, what the hell going on? Where could the bottom of BTC be? Is the cycle over? All good questions. I don't know if the cycle's over. It could be over. The technicals honestly are saying that it probably is. I just don't know if that's true. Ted Petey said, maybe it's copium, but I just can't imagine that it's over already. We have so much liquidity on the horizon. It would be a first-timer BTC IWM do not react to the massive liquidity injections. Yeah, that's true, right? And that's where I am. And don't get me wrong, and there's people, like even Michael Howell has said, hey, things could get difficult. He started warning us probably before most that we could see problems with liquidity. I actually worry about liquidity. If liquidity really does crack, that could cause problems where bond yields go up higher too. I really don't want to see that because my hedge is TLT. My primary hedge is TLT, and I don't want to see liquidity breaking down. We do know that there was, I wouldn't call it an emergency meeting, but we know the Fed met to talk over some of that, or at least there are rumors about it. I don't know how true they are. If chat knows, please say something. Sid 007, am I the only one extremely down from the November 1st top? No, I mean, I'm down a decent chunk, dude. I'm probably down 50% for my 6+ million that we just had. Honestly, that's just in 3 weeks. So it was brutal. But the only thing I'm glad about is I got out of 2X funds earlier than a lot of people. And then again, I was selling out of my calls. Otherwise, I would be brutalized too, because a lot of people are in growth. And if you look, we had, what's his name? It escapes me right now. He's on Pomp on Sundays. Oh, I don't know why I can't think of it. But he was talking about how he believes growth will struggle heading into next year and maybe for next year, and how there might be other market players, like even things like copper, things that are in demand for Jordy Visser. Thank you. Oh my God, I don't know why I couldn't say his name. He's brilliant. I love him. How things like copper and other maybe metals could be in demand because they're required for the build out of batteries and for the AI infrastructure. And so we might be looking at some commodities being driven higher for things like that. I could really see that when it comes to the AI play. I could see the bottleneck being the rollout. And we know companies like CoreWeave have already indicated that they have problems with stuff like that. Real quickly here, Dario, at the end of the day, the stock market always catches up with the real economy. Agreed. Sony, so do you think the BlackRock puts in ETH or BTC into an exchange is a bad sign? No, I don't really worry about that. I mean, yeah, I'm not worried about it. Ted, Raul is changing his models all the time, but now he's referencing a high correlation with Bitcoin and the ISM. I do agree with that, and that's actually something he's been talking about for a while, but a lot of people have. I do agree that if you look at the correlation between ISM, the manufacturing index, and just markets and the broader economy in general, including things like Bitcoin, you can see a correlation to it. Again, when we were doing quantitative tightening at the fastest rate in history, we killed a lot of things. We killed the real estate sector and we killed the manufacturing sector because they're not doing any CapEx, any build out when rates are really expensive and their margins aren't that good. And they're competing with countries like China that are literally overproducing to crush them. So you really fuck the manufacturing sector 3.5 years ago. And I think again, we're doing everything we can to do the opposite of that right now. Henrik, I don't like Henrik. We can talk about that in a second. Do you think, Dario said, do you think we could see the same thing as last year, December 2025, with the market dumping for 6 months after? I don't know that you can make a direct correlation to that. We're doing the exact opposite of all the things that we've done that made the economy constrict. And it is so popular for everything to be over right now. And that's kind of weird. That's not what happens at market tops historically. Normally you have euphoria. You don't have everybody warning you about the fact that it's going to fall apart. And I want to segue real quickly. Ryan Detrick, things you usually don't see with the S&P, 2.3% away from an all-time high. The Economist with another over-the-top bearish cover about how a crash is imminent. So this, again, will be the most heavily televised crash in history. You have bearish sentiment, AAII bears at 49%, highest with stocks near all-time highs since April of 2013. The world didn't fall apart after that. The CNN Fear and Greed Index at extreme fear, and I think we're still there. Are we at 10? I'm sorry, 10 was crypto. But again, 21 in here. In the stock. And then I think crypto is still at extreme fear. Let's just check here real quick. It looks like 14 now, so gotten a little bit better. But again, these aren't conditions where everything looks hunky-dory, right? The fact that it's now consensus that the top is in makes me feel comfortable that we're not actually, I know, isn't that the way it usually works? And again, everybody was really bullish. We probably should have been pulling back pretty hard around that time. James E. Thorne, for the record, this is a good one and I want to listen to it. What's below extreme fear? Not much. So my Canadian brother from another mother has some points that I think are really, really good in regard to the Fed and just the metrics that they use and where the economy is headed. He said, for the record, recent real-time indicators present compelling macro case for immediate Fed easing to get the FFR as fast to R as fast as possible. Weekly ADP data, that's the employment data. Again, it's the good stuff because these guys deal with like all the big players and payroll. Reveals that the U.S. private sector jobs growth was not only stagnant for October, but punctuated multiple weeks of outright job losses. At the same time, Challenger job cuts and hiring. Gray and Christmas reported more than 150,000 or 53,000 announced layoffs for October. The most for any October in over 2 decades, and pushing a year-to-date jobs cut in the past 1 million mark. So again, we're doing things that, especially between what the Fed did, where the cycle was already headed, and then what we're doing to try and reboot the economy and get things on the right track. Again, a lot of job losses, government job losses, huge amounts. But we're seeing it in the small business sector too, because small businesses that have been dealing with high rates of lending. I've got Scott Bessent talking this morning. We might pause this for a second, guys. I want to hear him. Give me 1 second here to find him. Let me find him here. How do I find him? I got to get used to the YouTube TV stuff. Fox Business. I want to hear Scott Bessent. I think he's just brilliant, and he's done a really good job talking about what's happening in the economy.
Affect the prices.
1 second, though.
This second roll back tariffs on grocery staples, including beef, coffee, bananas, and other food items. On Sunday, Treasury Secretary Scott Bessent told me how the process is happening.
I actually don't want to hear this because we're going to be listening to another video that has more in-depth data about it. So again, we're seeing jobs getting hurt, legitimately getting hurt. We had a study come out. I think it might have been Friday, it might have been over the weekend. MicroStrategy acquired 8,178. Oh my God, I was so interested in what was going to happen with STRC. Do we know what the breakdown was? Real quick, we got to segue, guys. This is a big deal. Buying 8,100 fucking Bitcoin is a big deal. It might not move the price, but I'm very intrigued by this. Let's see. I got to see what this... Because he said it was a big week, right? Bitcoin's forum. Oh, does he have any new news? No, he doesn't. All right, so I got to go to strategy. Oh, no, I just lost my armrest. Why am I... There we go. All right. That is a huge fucking deal. I'm going to give some double eyes here. Nope, I didn't mean to hit that. All right, so how much of that, do we know where it came from? We don't yet. I'm super curious how much of that came from STRC. Give me 1 second. I got to fix something. Ow. All right, sorry about that. Give me a sec. Let me come back here. All right, so that is fascinating. I am the world's highest IQ holder, and Bitcoin is going to 220. Are you? Are you? That's that Asian guy, right? What's his name? All right. Anyway, let's continue down this path. So that's fascinating. I'm very interested to see how much of that was tied to STRC. I think that also could show good things for SATA, which is that version of the perp for ASST Strive. Very interested. You think they took down the post down? What post? Oh, it's been deleted? Now I'm confused. Let's go back. Did they really? Did somebody have a typo? Because that's just a huge number. Oh, you're right. All right, you guys let me know what happens with that. We'll keep going because that's a huge 8,000 is a massive amount of Bitcoin. I don't know if somebody fucked up there. I was hoping for a good number with STRC because, again, just the volatility and the craziness. I was hoping we'd see, something or just a mix of funds that they have. But 8,100 would have been a huge one. Let's keep going. So turning to housing, Fred data just suggested that CPI shelter is 3.6 year over year. The most current market-based rent index data showed national rents declined in October at their fastest pace in 15 years, negative 0.3%, while Lennar, the country's major home builder, reported that median new home prices have fallen 9% year over year, marking one of the largest annual declines in the modern housing cycle. The company spent an average of 14.3% of the final sales price on incentives in the most recent quarter, levels not seen since 2009, after the great financial crisis, trying to rebuild the housing sector again. So I wanted to speak to this because, oh no, I'm not even focused on the 12 million. This is more about just capital preservation and figuring out what happens at this point. I don't care. I'm going to take that out the next time I do an update. I don't care. Like, there's times where you have to be somewhat smart. And you have to realize that that you're at a time that's precarious and could be. And so I've dialed out a leverage massively. I'm ready to ride the wave, and I'm ready to get to maybe 8 million or 10 million if things turn out well, but it's probably not even to the beginning of next year. If things go well over that period of time, it could be more painful than over the short term and then get better. I think that's probably the more likely thing nowadays, but it's just hard to be 100% clear. Anybody who's told you that everything is over with great confidence, I think is crazy. Anybody that's telling you that we're going to the moon, not a lot of those people right now in the next couple of months. or 6 weeks is crazy too. And I know Tom Lee has said that he sees 7,000 on Ethereum. He could still be right. We haven't had Wednesday come yet. But I do want to talk about this. So jobs are very, very weak. Fed lowers rates when that happens, right? That's one of their mandates. Their two mandates are keeping inflation down and keeping jobs solid. Jobs are horrible. And inflation, the biggest component, 33% of the CPI is housing, and it looks like shit. And or I should say shelter, and that includes housing and rentals, and it looks like garbage. So again, there's no direction to go but up with this. Sai said, good NVIDIA earnings and rate cut in December. Hey, dude, we have quantitative tightening ending in less than 2 weeks. We have the potential for QE coming. We have jobs looking weak. We have inflation looking weak, at least when it comes to these things, right? 1/3 of the components. Let's add the Cass Freight data, including the COVID crisis period. The last time Cass Freight Index shipments data was this low was in October of 2009, after the great financial crisis and about the time where we're getting to pick up in the economy again. If the Fed replaced the lag OER shelter input with the PCE calculation, now he's talking about some of the fundamentals of it, actual October market rents and new home price declines, headline inflation would collapse to less than 1%, highlighting the substantial overstatement inherent in official measures relying on OER. To be clear, Powell's Fed has already created a housing recession. I agree. It's happened a long time. Over 3 years, we've been in a housing recession and a manufacturing recession. Collectively, in my opinion, these signals, freight data, multi-year high and low layoffs, and a freezing in new hiring, deep rent and home price drops, and negligible forward inflation pressures based on real market data signifying a turning point in the economic policy cycle. The lagging model-driven OER that the Fed, for whatever reason, clings to is misinforming policy at moment when leading labor, housing, and true price signals are flashing ease. Why is the Fed tight? Let's add that tariffs are not inflationary. Even Fed's own work proves. Yeah, what was it? Was it the San Francisco Fed or somebody that said 150 years of data shows that tariffs aren't inflationary? And there's some nuance to that, and we'll talk about that. Objectively, he said the Fed is late. They should cut rates in December, and the FFR should equal R right now. And for the record, it's declining. Don't forget. Distributive lags of up to 2 years for rate cuts to work into the real economy. Yes, Powell is incompetent. I agree with that. And the Fed rate cuts aren't what's going to save us. It's perception, and it's the fact that we're already so low in real estate and manufacturing, and it's all the deregulation. It's the better tax stuff. We'll let Bessent tell you about that in a second, though. Let's see. I might want to talk about this. It's the U.S. Let me see here. Go to live. What am I doing here? Why isn't this? Let me just do this. I'll just refresh. Got to get used to this. I'm not a perma-bull, but I do think Tom Lee is going to be right with his end of the year predictions. Everyone will kiss his feet. Still a lot of healthy. Or he could be fucked this time because he was consensus and he was making bold claims and people are counter trading him. That can happen. I do think, though, I think that he's probably going to be more right than wrong, and that we're going to see the economy recover. I do want to see this, though, real quick. And sorry, I have to. It's kind of weird the way this displays. I want to go back just a little bit.
Because they believe that cattle caused climate change. I mean, that.
Let me go back.
As part of this broader effort to rein in price.
So this is about the deal that they struck with Argentina. I believe we also struck a deal with Sweden. We'll try and talk about that in a little bit here too. Again, the tariffs were in place to bring in some temporary revenue and, most importantly, force companies and countries around the world to build in America. And that build out takes time. Scott Bessent thinks Q1 and Q2 of next year we'll start to really see some of the ramping of that. We already saw our first magnet built in the U.S. for the first time in 25 years. So we're doing things that are right. They might take time to play out.
Prices for American families. Joining me now is the Secretary of Agriculture, Brooke Rollins. Secretary, great to see you. Thank you so much for being here this morning. We've got so much to get to with you, and I want to get your take first off on that prediction from the CEO of Omaha Steaks. What is meat going for right now? $4 or $5 a pound? He's talking about $10.
Well, that's right. And I sure look forward to talking to him. I saw him on your show. We had it on in the office on Friday. I thought he was very well spoken. I do believe, though.
It will be fascinating, guys. If you look in the bottom right-hand corner, you can see where Bitcoin's trading down again into the morning. I kind of like this pattern. This pattern where we're kind of going underneath. So we broke down, right? We traded in this range. We broke down underneath of it. Now we're grinding down into the right. I actually think that's kind of a good trading pattern that could send us higher. We really want to get above 103, ideally even more than that, in order to be bullish over the short term. I still think that could happen. But Akash, you could be right too. More pain could come. We will see which direction we're headed towards. I do want to talk about earnings, though, Dario, because you make a really good point. I think the earnings data looks really, really good, and I want to talk about that.
That his forecast is not going to be correct. Of course, no one knows really. But the idea that we won't get prices down until 2027, I think there are a couple of important factors here, Maria. The first is this, that we are suffering from the last administration's literal war on cattle. If you remember, they wanted to reduce the herd sizes because they believed that cattle caused climate change.
Yeah, remember, cow farts are the big concern, guys. It looks like Bill Gates is finally giving up on that now. But they were literally trying to reduce the amount of cattle that we had. And then more recently, we've got disease that came up from the cattle coming up into Mexico from the migrations that were occurring. They were bringing disease with it, so we had to lock down and basically prevent cattle from coming in from the south.
I mean, that wasn't that long ago that was sort of a common narrative. So lots and lots of issues there as we rebuild the herd based on the devastation of the last administration's policy. That's the first thing. The second thing is that there is no doubt, because of drought and that reason and others, that we are at a low herd size. Now, you marry that to the fact that we have an 8% increase in protein and beef demand in the market. People want more beef. It's extremely healthy. And as Secretary Kennedy and I move toward releasing the new dietary guidelines and pivoting a lot of the food, the government-run food supply a lot through USDA, you're going to see even more and more demand for beef. Then on top of that, we've got the screwworm south of the border. So our ports have been closed almost since the late spring, where we haven't been moving about 1 million head of cattle across the border of Texas, New Mexico, and Arizona from Mexico. And again, you're in this perfect storm that we're in. But the Trump administration has released a new plan. We are moving toward opening up 5 million acres of grazing land. We're obviously at some point soon going to be reopening the borders. We've got screwworm under control south of the border. Still a couple more things before we get there, but we're getting close. And the president is hyper focused on this. So,
and then you have the deal with Argentina too, to bring in beef from there. Oh, we got Kevin Hassett talking on CNBC. Fuck, we're going to have to move to that too.
Our numbers and our formulas are showing that prices will start coming down as soon as next spring and certainly by summer and fall of next year.
See, this is what you want to listen to, guys. You want to listen to the key people within the administration on what they're doing to help with pricing, to help with the economy, to help with deregulation, all these things you want to listen to. I want to say something real quickly about Mike Alfred too. Mike Alfred has Elon Musk following him as of a few days ago. He's been talking about how he's been chatting with them. I think that's probably true. They're a hyperscaler. Elon's going to need a lot of deployment too. I don't know if they're having some interesting conversations, why he's talking to him, but he did start following him. So Mike Alfred is not full of shit or a shiller like I think some people want to say he is. He knows a lot of really important people in this administration. And again, I think he's probably more liberal than anything. So he knows a lot of people that are rich and powerful. And again, like there's the potential that Mike Alfred is a billionaire in the next year or two. So he's got some power. He's got some influence. I think you have to take what he says somewhat seriously. And again, Tom Lee is that same way. He's talking to all these different investment people. And he's getting to see what people's concerns are and where they are mentally in the market. And so I think these people do have a lot of value and a lot of weight in what they have to say. We will talk about ASST in a little bit. I do think that the warrants, there's a lot of warrants that are still available. They only last a year, so they got about 11 months left. It could suppress the price a little bit at the 135 range. Right now it's sitting at 106. It's down again today after being down 6% on Friday. But again, I think history tells us that Monday's probably a little bit of a bounce. The only thing I'm really worried about is whether or not we have a liquidity issue where the Fed has to do some kind of emergency liquidity. That's probably the most concerning thing. I want to finish up here, though, with the U.S. Agriculture Secretary and listening to her, and then I want to jump to Kevin Hassett and listen to what he has to say, too.
Year.
Well, thank you for that explanation. That was very good and, of course, understandable as far as what's going on here. I think meat right now is going for about $6 a pound. So we'll see about that prediction. But what about the soybean purchases, Secretary? I mean,
yeah, I will say this, RKH. His comments have been very bullish, very verbose. And I would honestly say that Tom Lee's kind of been that way, too, even though he looks a little more shaky lately and just like he's been through the ringer. And he probably is. He's got a lot of people shitting on him. When you have 300, 400,000 followers on X and you have a massive profile with like every investment person in the world, you get a lot of heat.
China is now reportedly slow-walking the American soybean purchases. Look, they've done this before, but President Trump had that trade truce with Xi Jinping, and now we see USDA data shows only 2 purchases bought in 6 weeks as China's stockpile surged to multi-year highs. Brazil now supplying nearly 80% of the imports. Analysts say Beijing is using soybeans as a geopolitical bargaining chip as American farmers wait for the 12 million tons China committed to buy by year-end. The secretary, though, told me that he's confident Beijing will honor the promise. Watch this. Are you expecting them to resume the purchases of soybeans, or are they going to double-cross us on that as well?
They've already started the purchases of soybeans. They've agreed for this buying season to buy 12 million tons, 25 million tons for the next 3 years after that, so a total of 87 million. And then we have lots of other trade agreements that call for soybean purchases. I do believe it's very unfortunate they made pawns out of our great soybean farmers, but we believe that we have remedied that. If you look, the prices of soybeans are way up since the meeting in Korea, and I think they will honor this.
So, Secretary Ron,
I do want to just take a look at something real quick. I want to look at soybean prices. Let me see here. There we go. Oh, it's right at the top. Retarded. Okay. Wow, he is right. And it's starting to go up, but let's look out longer here. Okay. So you can see kind of the pain, right? But you know what, though? Is it really crazy for the soybean farmers? I mean, don't get me wrong. They've definitely had some highs, and it was probably scary down here, but it looks like we're starting to return to a normal range. So there might be some way too much hype on the fact that, soybean farmers aren't getting paid.
And to be fair, Secretary Bessent said that the deal's not done yet and that they should have a signed document by Thanksgiving. It could be that that's why we see.
I do want to say this, guys. What do you think the most likely path is for the markets with quantitative tightening coming to an end, the potential for another rate cut? We just got one, but another rate cut in December, the deal being finalized with China trade, and the potential of implementing some kind of QE and starting to do buybacks. And again, we know that the Fed is going to start potentially losing power in February because we have people that are stepping down, and we could start to see a flip in who has power over the Fed as far as the voting members go. I just think that there's a lot of stuff that people aren't taking into account. Money has to flow into something, right? Yes, it does. And whether it flows into the dollar because of like what happened during the pandemic where everybody got scared and they just put all their money into cash, whether it flows into bonds, whether it flows into gold. Gold, I just want to show this real quick. We're going to kind of bounce all over the place today. I want to really pay attention to what these very important people that are part of the government are saying and doing and how competent they are. And then I want to look at the underlying things and themes that are going on, underneath that. But if we look here, gold still looks toppy, guys. We still had our monthly top. If you just looked at it this way, now don't get me wrong, it could end up being something like this, but we're against a fib resistance level. We've already banana zoned in gold terms, right? And it looks like it's retracting. This doesn't look like the container that all the money is going to flow into. It looks like if I was in gold and I had made a lot of money off of gold, I would be questioning whether or not I should be putting money into the markets and or into Bitcoin. I would be looking at the opposite of what had happened. I would be saying, fuck, I did really good on gold. But is it possible that Bitcoin is the next, the digital version of gold? I do believe that some of these things are true. And Yeah, and so you could see, I think, people transitioning out of that. I still think that happens. It's what makes sense. And especially when we're looking at, well, we'll talk about Bitcoin, just again, increased adoption. I want to say this, Ryan Detrick over here on the U.S. economy real quick before I jump over. Look at the earnings projections for the S&P for 2025 heading into 2026, okay? Look at this. Look at how this is not what you have at the start of a recession. It's just not. It's not like, again, we have a weak job market. We have all these things that have been artificially depressed for years and years and years. I would say we've been in a fucking recession. It's been a rolling recession. We hear this all the time from Cathie Wood. Real estate has been in a rolling recession. Manufacturing has been in a rolling recession. Sure, growth has done well, but if you look at the rest of the fucking S&P, if you look at the IWM, the small caps, they've been devastated. There's no bull market for small caps. There's been no real bull market for Bitcoin for over a year, right? There really hasn't been. There's no bull market for manufacturing. There's no bull market for real estate. So my argument is, if we're able to get rates down, is it possible the bull market is sitting in front of us? And I know that sounds insane because the S&P has done really well. And maybe growth, a lot of growth doesn't do as well, like Jordy Visser talks about. Auto loans have been collapsing for a while too. Honestly, the auto sector did its best in the pandemic, right afterwards, when all the money printing. Once 2021 came around, the auto sector was crushed. So all these things have been crushed since the end of 2021. Autos haven't been great since that time. And again, delinquencies on auto should be horrific because of the fact that people got auto loans when they were getting free stimmies and they didn't think about whether their bills were going to be sustainable in the future. Corn prices are what's killing most farmers. $4 corn is a lost price for most farmers with costs of inputs very high. Maybe. I don't follow corn. I'm not a corn farmer, so I can't speak to the specific nuances of it. But I think corn has actually done all right. I mean, it's had a 6%. It's down 6% year to date. So again, it's a little bit down. But if we go back and look at historicals, there are boom times for corn, and then there are times where there aren't. And so again, I can go back 50 fucking years on corn, and I would actually argue that it's doing all right. I do hear you, though. I do hear you on the input costs. That's probably the biggest thing, right? It's the fact that, farm equipment's higher. It's the fact that it's all these underlying costs that probably are hurting farmers. It's less about the price of corn, and it's more about the fact that all the underlying inputs cost them a bunch more, and it's tightening the belt on farmers. But guys, I would argue all the farmers I know, I live in the Midwest, all the farmers I know are multi-millionaires. They have big, huge fucking houses. They've got massive barns. They've got all these build-outs. They've got beautiful properties because they've seen their real estate increase in value. They've seen their houses increase in value, and they've had really good years. If you look, for farmers especially here, from kind of the start of the pandemic, the prices that they were seeing in here were double what they are now. So they had a nice injection too. He did buy 8,178 Bitcoin. Okay, good. I'm going to go back and retweet that one more time here. Let me go back to here, I guess, with the correct one, if I can type. All right, let me just get the right one here and repost that, because that's a huge number, guys. This is kind of beautiful to see that there is still a bid of 8,178. I mean, I think that's more Bitcoin than Strive has right now, and they just fucking bought it. So I don't know. This is pretty awesome, honestly. It just shows that there will be continued buying from Michael Saylor. He is brilliant. He has structured this in a way where he has no real risk. People are dumb and think he does, but he really doesn't. Let's go back over here and finalize this with the Agriculture Secretary.
The slow walking, but what are your thoughts on the soybean purchase?
I certainly listen with interest, and I talk to Scott a lot. He is an incredible leader for this administration.
Yeah, exactly. You don't have a bull market when ISM is below 50, but it's been grinding under that for years at one of the longest consolidations in history.
For the president's vision, our entire cabinet, I know you and I've talked about, is just hand in glove on all of these issues. It's such a joy to work with Scott and the entire cabinet, and of course the president. I believe that what Scott is saying is 100% right. The president has said over and over that he will not leave our soybean farmers and frankly our farmers in general out in the cold on this. He has been absolutely resolute and almost a dog on a bone, making sure that our soybean farmers and other farmers are at the top of all these trade deals, and certainly Secretary Bessent has as well. So I listened with interest to Scott over the weekend with you and last week, saying we're still very confident that when the Chinese committed to buying 12 metric tons, that they are going to do that, 12 million. And so I see that moving forward. They have begun to buy a little. I think the nervousness comes in is that 12 million is a lot, and we've already, I think, just got about 330,000 out. But we'll get there, and I think the president has said over and over his relationship with President Xi is very strong.
Here's what I think in regard to this. I think that we can literally jack up tariffs again, and China cannot handle a lot more of that. It's definitely painful for us too. I want to be clear about that. But it's way worse for China. It's way worse for China. And so we will use that weapon again. We definitely will.
Secretary Bessent, we're going to get that deal signed. It's not even signed yet. And then we're off to the races. So I think that's what we're going to see very soon.
Yeah, I mean, look, I know President Trump loves the farmers. I love when he talks about the farmers. He really wants to ensure that they're getting a fair shot. Look, let's talk about the reopening of government. Secretary SNAP benefits flowing again.
All right, we're going to leave that alone. She's the agriculture secretary. She doesn't need to talk about that. I do want to jump over, though. I want to get back to Hassett and hear what he has to say.
100% on your schedule. Apply now to go from RN to BSN in as little as...
I wish the way they do this, I can't easily see.
Got a lot of work to do here in the White House every day. Just to first get the government open and now get a whole bunch of a free market news, because the labor market, tiny little part of the Trump administration.
Sorry, it's not quite as easy to maneuver on CNBC. I do want to hear Hassett, though.
YouTube. So when people come on,
here we go.
It's a hoax. Ridiculous. I want to thank you for coming in this morning.
Kevin Hassett is somebody I think could be the Fed chairman in the future, so I really want to hear what he has to say.
Always a pleasure. Appreciate it.
All right, President Trump cutting tariffs on more than 200 food products. The administration saying that certain foods could be exempt since they're not grown or processed here in the U.S. Join us now to talk about the cost of living, tariffs, and the possibility of sending Americans $2,000 direct payments. White House National Economic Council Director Kevin Hassett. Good morning, Kevin. How are you?
You guys had a great marriage session there, marriage counseling session. I think there's hope for you too.
There's hope. We cover the.
I wouldn't, real quick, guys, Buffett buying Google, I wouldn't make too much out of that. I think it was a cool narrative because it could probably help the AI narrative a little bit more. But I know he's been selling out of Apple, and he's maybe just trying to reallocate to some other tech. And he's not really even around anymore. So the patterns of buying and selling are probably going to be different for Berkshire Hathaway in the future. I wouldn't make too much out of it. Oh, we did get some breakdowns. Stoney, thank you for that. Strategy raised $136.1 million from preferred ATMs this last week. $716.8 million came from Stree. This is the European one, I believe. Correct me if I'm wrong, chat. And purchased 8,178 BTC. They raised $131 million from STRC. So it's really the European market getting into the game that's been interesting, with almost 6x the allocation of what happened with STRC. That's fascinating. Michael, if they don't cut in December, they'll cut in January, and Powell will be out soon anyway. QE is more important, in my opinion, and the Fed is screwing this up as usual. And again, I'm actually okay with the trough. I was okay with data being shut off. I don't think that's the end of the world. We got manufacturing data too. We'll look at that. Let's get through Hassett here. I'm going to have to let's get through Hassett. 1 second.
Cover the gamut. Professional optimists, professional skeptics. Maybe the truth is somewhere in the middle, Kevin. And I have been fairly optimistic when people come on about the U.S. economy.
It looks like Empire State Manufacturing new orders and shipments increased very strongly. Maybe I'll do this real quick. Let's look at the actual data. So we haven't done this in a while because there isn't much to look at, but let's get over here and look at economic data real quick. I do need to reallocate or fix this a little bit because it's all messed up. Okay, so let's look here. So, wow, that's a big number. So second highest number in new orders and shipments since April of 2022. That's fascinating. Empire State Manufacturing, Okay, I do want to just post this real quick. This is a very fascinating number, guys. So we're seeing some strength in manufacturing. I like that. I care about this more than I do the Fed lowering rates. I want to see more of this. I want to see strength in manufacturing. I think it's a really, really good sign. New York Empire. Let me put this in here. Oh, I can hear my kid. New York State manufacturing. God, I can't type today. Just had its second best month since. Why is the font so big? Am I bolding it or something? Something seems weird. Anyway, maybe. I don't know. Why is the font so big? Anyway, since April of 2022. All right. Anyway, that's fascinating. That's fascinating. I did just bold it. Okay, well, whatever. Fuck it. All right, let's get back to Hazen.
Economy. I can find a lot of positive things. Why do you think affordability is such a buzzword right now? I mean, we lived through 9% inflation, and I think Biden years, it averaged over 5% for those 4 years.
Sure.
We're at the highest levels that we've seen recently at 3%. Why all of a sudden is it, is it Trump's fault?
Right. Well, I mean, for sure, people still are trying to dig out from the big hole that was dug by the previous administration's policies. So if you figure the typical mortgage payment, monthly mortgage payment about doubled. If you look at a typical bag of groceries, the monthly bag of groceries cost about $400 when President Trump was leaving office last time, and about $512 right about when President Trump took office. And since then, it's gone up almost not at all. I think it's like $515, but it hasn't gone back to $400. And so what the Democrats are doing is they're saying that this runaway spending that we gave you guys that created runaway inflation is 100% your fault because you haven't fixed it already. And of course, that's very economically illiterate, and I don't think really many people in markets are buying it.
Well, I'll tell you, Kevin, one of the reasons I think that people are, and I'm going to highlight both sides, one of the reasons people feel like they're not keeping up is because real average weekly wages fell during the Biden years because of the inflation.
$3,000, that's right.
Right, so it fell. However, the president is constantly saying prices have come down. Now, inflation is still 3%. It's still too high. Now, oil prices, energy prices, there are certain things where they have come down. But when you keep saying prices are falling, that's not true because inflation is still, the 3% is on top of all the inflation we had during the Biden years. So we got all that inflation plus an additional 3%. And I think you should admit that.
A more precise way to say it, though, Joe, is that purchasing power has gone up. And so real wages, that's W divided by P for our technical people in the audience, have gone up by about $1,200 this year. So the way to think about it is that we've dug a $3,000 hole because of Biden policies, and we've gained $1,200 on the way out already, which should.
And the $1,400 in real wages going up, if we do the $2,000 check, if we're able to do that and get that out, and I don't know, there's some argument between the Democrats and the Republicans on whether or not that's legal, but I don't know. We'll see if they're able to do that. And I think there would be an incentive for Democrats to give a $2,000 check to the poor too. I don't see how it would be a winning strategy to block a legislative move to try and give people $2,000 checks. I just don't see how that would be a winning play for them at all for the bottom 40% of the country, which is normally, again, some of these guys are the ones that they've been winning on. So in the past, historically. So I don't think they'd want to do that, and they'd want to hurt those people. But those $2,000 checks would get us up to $3,400 in real wage growth, or at least some equivalency, right? Because you'd be adding to the amount of money that people have available to them. And we're going to be seeing the beginning of next year, people being able to change their withholdings to be able to account for the cost savings. And so they're going to have their real wages are going to look better in 2026.
I'll give you a great deal of hope for the future that the wage increases that we're seeing will continue. And even if inflation stays positive, make it so that people feel way better when they go to the grocery store and to buy a car. We've reduced the cost of buying a car with the deductibility of interest. I mean, there's a million things that we're doing to fix this problem, but it's just kind of astonishing to me that the cost problem is somehow being blamed on us. Now, think about it, especially with the Obamacare thing. So Obamacare is 100% Democratic policy. It's always been 100% Democratic policy. What they did is they expanded the subsidies during COVID, and then all those subsidies basically went right into the pockets of insurance companies. And Obamacare insurance policies have doubled in price relative to normal policies. And so the fastest inflation in the economy is these big government subsidies thrown at Obamacare insurance.
Yeah, imagine if they can get costs coming down in insurance, how much that could lead to an extra savings for people in the United States and just extra income that they have available to them.
Think about it, it's kind of like if you give lots of student loans, then the tuition goes up. It's that effect. And so now they're blaming President Trump for Obamacare as well. They should have fixed Obamacare in the first place. And President Trump had a plan in the big, beautiful bill to give people some subsidies, but the Democrats didn't like it because the subsidies weren't going to their campaign contributors, the insurance companies.
The whole issue of tariffs, if we're reversing some tariffs to try to help affordability, isn't that acknowledging that that tariffs were responsible for some of the higher prices and for some of the inflation that is still a problem?
Well, first, this is nothing new. If you go through all of the trade deals that we've been doing all the way through, then there have been things that we decided it was prudent based on the economics of supply and demand to exempt. And one of those things that we've been exempting all along is something that we don't make in the U.S., we'll never make in the U.S., or almost never. I know that in Hawaii they make some coffee. And so onshoring that production really doesn't make sense. It's not part of our strategy. And what the president just did with food is decide to make like a blanket movement so that we weren't going through each deal and picking this and that.
What's going on with India?
So again, food costs are going to get better because of the fact that we're literally eliminating them from the tariffs.
As an aside, in terms of a trade deal, we've been so close so many times. Were we ever close?
Yeah, we were for sure very close. I've spoken to the ambassador, and we've had visits, and I think that it's a complicated situation because the interaction between what India does with Russia and what India does with us, and so I think we're still quite hopeful. But it got pretty complicated because there are a lot of different variables in the India-American relationship. But they're good friends, and we're hoping we can work it out soon.
If you were the Fed, if you were running the Fed, I don't know if that's a possibility still at this point. I know the other Kevin has an op-ed piece, and there's more than two Kevins.
I liked it.
There's more than two Kevins, but Kevin Warsh has a big piece. Yeah. I don't know if you care to comment on some of his what he has deduced about Fed policy.
My good friend from down the hall at Hoover, Kevin Warsh, has a great piece in the Wall Street Journal. I commend it to people. I think that he's right that it's time for the Fed to turn a page and go back to really being independent and data-driven. I think they've made a lot of policy errors. I think Kevin and I agree about that.
And
agreed.
I guess that when people think of who would be the least independent to the Trump administration, people think it would be you, Kevin. But you're talking about independent.
I totally reject.
Oh yeah,
I totally reject
Cookie.
that. I mean, the fact is, there's a truck going by. The bottom line is that you do the job that you have, and if somebody's going to go in and they're going to be the Fed chair, then their job 100% of the time is to run an independent, data-driven Fed. And right now, my job is to be at the White House to serve the president every day. It's just a different job.
Is that truck headed over to the East Wing? Can you see it from there, Kevin? How's it looking?
No, you can't see it from here. But it's a tiny little part of the White House. So the parts that you're used to seeing aren't really the East Wing. There's some.
The reason I brought up the Fed, if you had multiple choice, the Fed at this point, both sides of the dual mandate are at risk right now. Neither side is at risk right now for the Fed.
I'd say neither side is at risk. Certainly, there's a Fed that has made some policy errors right now, and we need to get ahead of the curve on that. But no, I think that the Fed has a well-defined mission, a mission that most of the time it's been able to accomplish, and it certainly can again if it just makes sure that it's not acting in a partisan way.
I think Kevin Hassett would be such a better Fed chairman as far as communication and coolness and directness.
Well, I guess I meant, is the labor market, in your view, and we're going to hear more about it on Thursday, we'll finally get some numbers, is it slowing at this point? And is, on the other side, the other part of the mandate, is inflation, are we seeing the beginnings of another trend higher, or do you think that's headed lower?
No, I think on inflation, the last CPI report we got surprised 48 Bloomberg economists on the downside, and even had some sort of temporary bad news because there was a refinery that was shut down, if you're looking at the top line number. I think that there have been mixed signals in the job market and really, really positive signals in the output markets. As you know, we've got GDP now running close to 4%. We've got productivity running up around 3%. And so I think that there could be a little...
Don't forget the Empire State Manufacturing for new orders and shipments just jumped to the second highest level since April of 2022.
Little bit of almost a quiet time in the labor market because firms are finding that AI is making their workers so productive that they don't necessarily have to hire the new kids out of college and so on.
I agree with that.
Because there's so much output growth and income growth, that's the kind of thing that a free market will work out relatively quick.
Again, guys, look at those earnings projections that we just saw from FactSet. Like we're seeing companies get more efficient and wealthier, especially the big ones. So I think that's what we're seeing also, though, too, in some of the small company stuff, is if you have one person or a couple of people that are really good at, grokking chat GPTing, using AI related tools, implementing Palantir to be able to get rid of data silos, you're seeing very large performance gains, and you're seeing that you've probably got a lot of extra bloat sitting inside of your company that you don't really need. And so you're trimming the fat, but it's more about efficiency gains. And if anything, that continues to help earnings and margins.
Quickly as new ways to spend money emerge.
When do you think we'll hear, if you've been updated on the Chairman Powell's successor?
Yeah, I'm not exactly sure that's a decision for the president. I think that if you
don't know when we'll hear even?
Excuse me?
You're not sure when we can expect to hear? Will it the beginning of next year? Could it be this year?
Well, I think some of it might depend on when Chairman Powell announces that he's going to resign. But right now, we've got a lot of work to do here in the White House every day just to first get the government open and now get a whole bunch of legislation passed. So that's what we're focused on.
Yeah, we didn't really get to talk about.
I think it's fascinating, Anthony, that they're almost a $1 billion purchase of Bitcoin from Michael Saylor, and that the demand is coming out of Europe. I think that's the fascinating part.
You think there should be another reconciliation, Bill?
Definitely, at least next year. Whether there's time for one this year is something that I think the people on the Hill are looking into.
Okay. All right. We didn't get to talk about the answer to
Obamacare
and how to reform it, but you have ideas?
White House every day just to first get the government open.
I gotta
and
hear
now get a
this.
whole bunch of legislation passed. So that's what we're focused on.
Yeah, we didn't really get to talk about that. You think there should be another reconciliation, Bill?
Definitely, at least next year. Whether there's time for one this year is something that I think the people on the Hill are looking into.
Okay. All right. We didn't get to talk about the answer to Obamacare and how to reform it, but you have ideas there as well?
I'll be back next week.
Okay, good. You will? All right.
Yeah, sure. Yeah.
Okay, good. We'll see you then. Thanks, guys.
All right. Yep, bye-bye.
Still to
I love Hassett so much. He's such a good dude, guys. He's such a good dude. So again, I just want to look at this. So if you look at the estimate for 2025 for earnings, again, doing well. They show even better for 2026 right now. Does anyone know the tickers for STRE? I think that's literally the ticker is STRE. Noam said Jordy Visser had a great idea he shared over the weekend that AI will transform pharma companies by reducing medical R&D and why it's a great trade. I'm actually hoping Archie could benefit from that. And I do agree with him that pharma companies, I think he was talking about Eli Lilly and a few others, are benefiting from this. Eli Lilly just did the biggest AI, they're working to do a massive AI deployment. They're having some of the same issues with energy and getting access to it, but they're trying to do a massive build out so that they can use artificial intelligence to be able to come up with the drugs of the future. I think genomics, I think drug manufacturers, I think there's a lot of things that are going to change because of all of that. I did want to speak to something real quickly here, guys. MicroStrategy, you guys have a lot of questions about MicroStrategy. We'll jump over to it real quick, and then I'll go back to this. So I actually think MicroStrategy is a good buy here. I say that because it's down. I mean, again, if this is the end of the cycle and Bitcoin's going to plummet like a rock, that's one thing that could change the analysis quite a bit. Bitcoin is looking weaker heading into the morning, but I do want to reference something. I don't want to move this out of the screen. The RSI on the 3-day time frame right now is 32 for Bitcoin. So if we look at the weekly, it's not quite there yet. It's around 38, but we're looking at an RSI level, guys. Here's why I want to, you know what? Fuck it. We're going to bring it up. You got to see this. I don't think enough people are talking about this, just where Bitcoin is right now. And I think it's very, very important that they do. And we're going to get rid of some of the mumble jumble. And here's what I want to show you. Okay. If we're heading into a bear market, it's going to be a really pathetic one. Why do I say that? Look at the bear markets of old, okay? Look at the bear market of 2018 here on the RSI, okay? Let me just increase this. There it was, right there, okay? Look at the bear market of 2022. And remember, this was with the Fed raising rates at the most aggressive rate in fucking history. We're already down to 39. 39. The bull market officially ended in March of 2024, if you look at Bitcoin. March of 2024. That was when all the miners were peaking, right? Yeah, $10 is sad. Clean Spark is fucked. Temporarily, at least. But this is crazy because if this is true, we're not up here and getting ready to roll over. We're closer to down here in April of 2022, right? Or I should say this, April of 22, May of 2022, May of 2022. That's where we're at. So let's look at that, right? Let's look at May of 2022 and see where the price was. There you go, guys. So if this is true, if we look at the RSI, Relative Strength Index, on where we are in the cycle, we're already at the fucking bottom of the bear market. Could we, like Visser, Jordy Visser said, go into the 80s? Sure. We could do that, right? We could get down to 85 or something because things get weird. But, dude, we're so much... Yeah, BTC is far closer to the bottom than it is the fucking top right now when you look at the relative strength index. And so this is just something where... And at a time where gold went from a $10 trillion asset to like 22 fucking trillion. An extra $12 trillion. If Bitcoin got 2 trillion of that extra money... that extra $12 trillion, it would more than double the price of it, and Bitcoin could be close to $250,000 to $280,000. So, again, I don't want to be in leverage right now. I don't want to be in 2x funds. I don't want to be in long calls going to the moon, especially ones that close next week. I think if you do that right now, you're being a fucking idiot. But I do think that we're much closer to the bottom on Bitcoin than we are the top right now, objectively, in so many different ways. And so I know a lot of people are switching to it's all coming to an end. I get that, but I think it's wrong. I really think it's wrong. CleanSpark's brand is forever tarnished with retail. I say that, and that's not true. You know where? You know the last time I remember people saying that? The last time I remember people really saying that, and I mean, there's a bunch. PayPal was one. I mean, that's a piece of shit, so maybe we won't focus on that one. But let me just show you a brand that was tarnished forever with retail. Forever. And everybody agreed on that. And it was me and Arnie. And then I think Amit that later on said, I don't know, guys. I don't think that's true. Robinhood. Do you know how many people over here told me that the brand was forever tarnished on Robinhood in the $7, $8, $10 range? And that I was a fucking idiot for thinking that Robinhood was going to be anything better in the future because they had ruined retail. And there's no way anybody's going back to Robinhood ever again. They'll never have trust in Robinhood for what they did to them. And you know what? It seems like people got over that shit. So I can't say specifically, could CleanSpark turn out to be a turd? Everything that can happen, right? They've got stuff to prove. I actually do think Matthew Schultz is better. And again, they closed their $1.1 billion deal in the 15s. CleanSpark is in the 10s. So they had pretty good timing on that. But I just want to say, like, I would very rarely ever say that retail is 100% out of anything. I wouldn't say that. I think that's too bold of a prediction. Why? Retail are sheep. They are sheep. They have the attention span of a fucking fish, and they can always be turned around given enough shiny objects. That's my take on retail. And don't get me wrong, there's some that are really, really good. Retail has made a ton of money recently. They've been kind of chasing, and they had a nice melt up in some stocks where other people haven't benefited at all. When a crypto MM blows up, it's the equivalent of short-term quantitative tightening, Tom Lee. True. Echo, money has no feelings. It does not care. Exactly. That's what I agree with. Michael Roberts, CleanSpark is almost 90% toot owned. When they start deploying AI energy, yeah, how are they sitting on the toots? When did the term toot ever become a thing? Can anybody tell me? Chat, tell me. Where the fuck did that come from? Is this some like teenage shit? Like what the fuck happened here? Got all these charts I got to get rid of. So institutions have actually become a large part. There's 66% almost institutional ownership, and retail has dropped. Insiders aren't actually that much, which is fascinating. 21% short interest is what this was showing last. It could be a little outdated. But yeah, so I don't know with CleanSpark. I've got a position in it. It's not nearly as big as it used to be because of the calls getting blown out. And it could have maybe more pain. We do have to remember this, though. If Bitcoin recovers, it's probably going to do really well. And why do I say that? Because it broke out of a trend that started, again, about when Bitcoin really kind of topped, at least in regard to the RSI. And that was in March, April of 2024, when all the Bitcoin miners went to the moon. And I mean, that was a pretty good time, right? If you went from 631 on CleanSpark up to 24, you were feeling pretty godlike. And if you went from 347 on it in November of 2023, and then all of a sudden it's March of 2024, and a period of 4 months have passed, and you went from $3.35 to $24. I remember that time. 9x increases. Everybody loved Clean Spark, dude. Everybody loved it. They got a 9x in a period of like 5 months. They loved it. They were very happy about it. And that sentiment changes very quickly when people make a bunch of money. It just is what it is. And BMNR could do good too. I am staying away from it just because, again, Ethereum isn't as solid as Bitcoin, in my opinion, right now. That narrative of Tom Lee's is newer, and I think it can break down and just melt down if for some reason we continue to drop for a while. And I don't want to be into shit coins. Again, I got out of shit coins, I think, the beginning of this year. Once I saw the tariff stuff, I'm like, I'm closing out all my shit coins. Oh, hey, dude. You know who I think we have? You guys were just asking about him earlier. Maybe I'll pull this up. Might be a good thing to see. But, oh, wow, strategy. Oh, no, that's STRC. I was going to say it turned around and started going up, but it's just STRC. It's not MicroStrategy. But I do think that, again, I think Bitcoin is more likely to be closer to the lows than it is the highs when we're looking at RSI and just what it's done. And so we're at the perfect bounce zone right now. I've said that for a while. The perfect bounce zone would actually be getting down to like 92. That would be a good one to be at, and then start to see a recovery. And I think we could test back up all the way to the 102, 103,000 range. If you look in the bottom right corner, guys, that's where the 50 moving average is. The other two cycles that confirmed the top for Bitcoin for the cycle. And again, I think the cycle timing is going to be way different. I think if we do have a top coming at that 50 moving average, because again, the last two cycles, we retested the 50 moving average. It's around 103. So I wouldn't, if you were looking to reduce risk here for Bitcoin related stuff, I would wait until 103 to where we do that retest. And then I would reduce exposure then if you're worried about the short term. I wouldn't be in 2x funds. I wouldn't be in long calls. I wouldn't be in I wouldn't be in shit coins personally. I think it's just all fucking you right now. James Invest Answers has had a hard time containing his happiness that ETH has been crashing. I mean, is Solana doing well? And I love James, but is Solana much better? Is it much better? That's his baby still, right? Like, is it much better? How much has Solana went down? So, I mean, I just don't know that I would take that as the win that he might think it is. And I really love James, but it's down 46%, right? Solana has dropped 46% from September to now. So I don't know that he can say shit about Ethereum right now. I just don't know that he can, right? No, James is not. I watch every video and belong to the Patreon. Okay, I was going to say, I can't imagine that. Because, I mean, Solana, why would you do that? Like, that'd be like taking a victory lap when your thing has done worse than the other thing. So that makes more sense that he did not do that. No, he hasn't. That BS never said that. Okay, good. Thank you. Okay, we got some clarity there. I don't watch James as much because I got my own stuff going on. Michael Roberts, I think ETH has more room this cycle than BIT does. Well, that's true if it goes up, but if it doesn't go up, you've got a multiplier behind you. The multiplier for Sol is bigger than Ethereum, and Ethereum is bigger than Bitcoin, right? So just remember this stuff. All right, real quickly here. Let's see. I want to check real quickly and see what we're going to have for more economic data, if anything good today. So we just had the New York Empire State. We have some Feds speak. We have bill auctions. We have more Feds. So we got 4 Feds talking today. So that'll be interesting to see what the headlines are for those. Let's jump over here and see what it looks like tomorrow. ADP employment, New York Fed services activity, Red Book, factory orders. That should be interesting. NAHB, housing market index. So we got some good stuff. I got to update this too to have less of the other garbage. Here's what I wanted to speak about, guys, in regard to energy requirements and needs, and this kind of ties in with AI. We right now have the equivalent need of 44 more nuclear reactors being built by the end of 2028. That is a huge deal. That's our shortfall. So I do think energy can still do well as far as demand because there's going to be a shortage. So it'll be interesting. I'm not 100% sure what the play on that is because, again, there's some things that are energy related that have done really, really well. So I don't know if it's more the underlying commodities that feed them or what. but we could see energy continue to do well. Here's that post talking about how Peter Thiel sold all of his NVIDIA and slashes his Tesla. But Tesla is still the biggest holding. If you look here, Grok says, yes, confirmed via Founders Fund Q3 13F filing submitted recently. They sold their entire NVIDIA position, valued at nearly $100 million during Q3. Tesla holdings were slashed from 272,000 to 65,000. Now the fund's top remaining position is about 39% of the portfolio. This signals caution on AI hype. But I like the fact that Tesla is still the larger part of that. But again, if Peter Thiel, a very smart man, is cutting back, you maybe want to think about that too. And the market has run hard. We got to 7,000 basically on the S&P. I was calling for 7,500 by the end of the year. Tom Lee's still calling for that. If that happens, that'll be a nice uptick, but it's not crazy far from where we are right now. I think we just have to realize that even if we might not have caught all the upside of this, from like owning Iron, from owning Palantir, from owning many things that have done like all the nuclear shit and the AI hype stuff, this has been huge. You know what I mean? Like we got to the edge of 7,000. We were down in April at 4,800. This has been a huge move. This is the golden retracement zone. We are trying to fight against it. So again, I'm struggling. I'm struggling to call the top. I'm struggling to call the bottom. We're somewhere in between. Both things could be true. Don't be in leverage right now, man. It's way easier if we have a flush out that like what we saw around the tariff lows to buy more. And if anything I've learned over this last week, I should have gotten out of leverage earlier. I told you guys that was the game plan. I was doing it. I wasn't doing it quick enough. I'm glad I didn't get calls on Tesla. I'm glad that I'm just sticking with stock on that. I'm glad that I exited the 2X funds. I wish I would have exited all of my calls. 7,000 is doable. I agree with that. Elon's data center in space will save us. Isn't that crazy? Anyway, let's keep moving. We got to move faster. So let me check real quickly, too. I want to see what we have from Tom Lee for today, if anything. He might be a little bit quieter because it's just been such a brutal time. Sometimes it's better just to shut your mouth. You know what I mean? Let me go up here just for self-preservation. And I know he's still trying to be strong and encouraging, but again, it's a tough environment right now. Let's look at how the earnings closed out. We do have that. So let's look here. Let's look at earnings that are left and where we're sitting. So 85% are beating estimates. That's up 1% from before. It says of those beats, we're beating by a median of 6%. So again, it's looking good. Nothing crazy here. I'm going to go back and just make sure we got nothing else. What happens when we forget about bad times? Chart of the day. Okay, well, what's she talking about? Hardika. AI flips to bearish so quickly. Yeah, it did too. Look at that. So people went bearish very, very fast. I do agree with that. I'll probably read this and see how much value it holds and then get back to you guys. Nothing seems to be normal of this Bitcoin cycle. That is very fucking true. That is very true. I wanted to talk about this. Elon Musk said that capitalism will achieve what communism couldn't. And I want to speak to that because I think it's 100% true. I think that the socialist utopia that everybody dreams about is coming from capitalism. Seller opens mouth, purchase equals BTC goes down. Yeah, isn't that funny? Again, I just think we have some sell-off pressure in the morning. Mondays are good, so the last 11 have been great. Let's see if that holds. Mario said, Elon, capitalism will achieve what communism could only dream of. The irony is that the capitalist implementation of AI and robotics, enabling prosperity for all and abundance of goods and services, is actually what results in the communist utopia. The problem with communism is it's universal low income. It's not that everyone gets elevated, it's that everyone gets oppressed, except for a very small minority of politicians who live lives of luxury. Again, the Cantillon effect. Are you close to the money printer? You're doing great. If you're not, you don't. If you're Nancy Pelosi, you're doing better, right? If the actual communist utopia is achieved, where everyone gets anything they want, it will be achieved via capitalism, because fate is an irony maximizer. I 100% agree with this statement from him. Marquis, there are a lot of short-term treasury bills issued and bought, not a lot of longer-term 10 plus years. The drain in liquidity is a lot. I agree with that, and that's probably why we're seeing, again, a little bit of a dip today. It's went up a little bit, but we're seeing U.S. government 10-year down 0.31%. I wanted to point this out too, because I think it still does matter. We have way more, if you look at consumer balance sheet, and again, this is definitely isolated in the richest of the rich. That's very true. But when you look at the wealth and home percentage, other financial assets, pension funds, deposits, and other tangibles, the amount of wealth that people have is close to $200 trillion when the overall liabilities that people have is close to 21 trillion. And the thing I love the most about the liabilities is the majority of it is mortgage debt. 67% is mortgage debt. So guys, the balance sheet of individuals actually is not that bad. And people will make you think, well, all that money's in the stock market. I mean, that's kind of true. A lot of it is, but a lot of it is tied up in homes too. And I don't know. It's still sitting very good. Does this change in the future and assets get a lot lower because the stock market collapses? That can happen. Tariffs. So there was a report that said that tariffs lower inflation. What's fascinating about this report is I think it came out of the San Francisco Fed. But essentially, it said that 150 years worth of research show that tariffs are disinflationary. I do agree with that research. What Peter said is no, they don't. They create a recession, which then lowers prices. I do agree with that too. So I said, but I also believe the tariffs cause lower consumption of some discretionary items. Lowering prices on those items while others get more expensive because they're non-discretionary, which brings prices higher. But ultimately what happens is a slowing of the economy, causing disinflation, and if you don't balance it, you get deflation. So if you don't do a good job managing it, you get deflation. And we don't want that. But I do think that the study was right. We're seeing tariffs create a slowing of economics, and which creates a slowing of inflation. Arthur McWaters, and I think with that, the Fed needs to do a better job lowering rates. He said, sadly, the U.S. has become like the giant in Gilligan's Island, bound by 1,000 ropes of regulations. If we want to accelerate technology in areas like housing supply, we have to reduce bureaucracy. Excuse me. A little yawny. Total pages published in the Code of Federal Regulations. So you can see how bloated federal regulation has become. And thousands of pages. We went from the 50s and 60s, 20,000 plus pages, to starting to balloon into the 60s, and then balloon again in the late 70s, and then balloon throughout the 80s, take a little bit of a reprieve, and then just kind of go up again. Regulations are stifling our economy. It is one of the number one things that Trump is trying to get rid of, and I think it's going to be a good thing. Bobby says, I'm in 1 week VIX calls as a hedge for the final dump this week. If we have a final one, maybe it's over. Maybe this is the flip. Again, markets are kind of front running. We do have the government reopened. In 2 weeks, we have the end of quantitative tightening, and we have the potential for QE in the future. And we have so many other positive things behind us. The question is when they start kicking in. Again, check out Jordy Visser, guys. I think he's really great. He talks a bit, again, about some of his good plays or some of his plays heading into next year and how he believes some of those will be like energy commodities, how he still believes that Bitcoin probably has a bottom in the 80,000s. Archer, I don't know, Thaddeus, I don't know why we would want to talk about Archer. I think you guys need to get your head out of the clouds in regard to growth companies. That's one thing I definitely agree with Jordy Visser on. How much money is Archer Aviation making, guys? Can you see this? How much revenue is that? Is that a lot of revenue? Their burning revenue or net income, it was a negative 130 million last quarter. Their free cash flow was negative 126 million. I don't know why anybody would own this piece of shit stock, especially when it's recently off all-time highs. It was at a low in the dollar range. That seems like a fair assessment for it. It was at a high of 1364. Now it's at 8. I don't own this piece of shit stock. Just get ready to watch it drop a lot more in the future. I would not want to own something that Jordy Visser was talking about. I would not want to own companies that have no real revenues and no potential for revenue anytime soon. In a market where the S&P was near $7,000 or 7,000. Sorry. 7,000. I would not want to do that. I would not want to own that shit. So I would say stay the fuck away from those things. That's what I would say, brother. Stay the fuck away unless you like pain and suffering. And there's been plenty of that across markets recently. So real quickly, this is talking about reproduction of humans and how there's a religious component to it. I actually disagree. I don't disagree. I do think that religiousness falling has probably been a problem for the birth rate. But one of the things I wanted to say here is I said I actually believe it's the broken money that's killing us, right? People can't have babies when they don't have money and they're barely just surviving. I think that's probably the biggest driver. I wanted to point this out. Canada's largest copper mining facility has closed down and is moving to the United States. I think that this is a big deal. These are the things that hurt Canada but help benefit us that you're just not hearing about. They're getting overwhelmed by noise. And yeah, it does look like it was the San Francisco Fed that showed that tariffs and what they do with the economy. And the data showed that tariffs are actually disinflationary. Now, there's other stuff. To be clear, it's that important context missing. The study showed that tariffs lead to lower economic growth and job losses. These effects turn into lower pricing. That is true. Real quickly, this is the video I wanted to play. Also, I wanted to tell you this real quick. Switzerland agreed, it wasn't Sweden, Switzerland agreed to invest $200 billion in the U.S. as a part of a new trade deal. Switzerland will purchase more Boeing planes, and U.S. tariffs will be reduced from 39 to 15%. So again, passing more trade deals. We really need to see India and a Chinese trade deal. I think that needs to happen. I want you to hear Besant, though.
And we begin this Sunday morning with the soft war.
This is 16 minutes. It's a long one. We've got about 20 until the markets open. But I think it's so important to listen to Besant. He's so brilliant, guys. He's just somebody you have to listen to. He is one of the key drivers of the economy right now.
Between the U.S. and China, reportedly accelerating once again. Coming up, President Trump's leading frontman on fighting China's aggression. Treasury Secretary Scott Bessent and FBI Director Kash Patel, who is just back from Beijing in an effort to stop the flow of fentanyl into America. As a secret White House memo alleges that Chinese e-commerce company Alibaba is helping China target the United States. The Financial Times reporting that the document says Alibaba gave the People's Liberation Army access to customer data and information on U.S.'s critical software vulnerabilities. Alibaba told the FT that the reporting was, quote, a distortion of the facts. As the Wall Street Journal reports, that Xi Jinping is now holding back vital resources to the U.S. military once again. The Wall Street Journal this past week reporting that China plans to block the shipments of rare earth magnets to any U.S. company tied to the U.S. military, while fast-tracking shipments to other civilian firms that do not do business with the Pentagon. These latest blow-ups just weeks after President Trump met with Xi Jinping in South Korea. And the two said that they agreed to the free flow of rare earth minerals from China to the U.S. for 1 year, as well as soybean purchases in exchange for lowered tariffs and limits to the U.S. entity list. Here's the chairman of the China House Select Committee, Michigan Congressman John Molinar, with me Friday on Mornings with Maria on Fox Business, calling for the Securities and Exchange Commission to remove Chinese companies from U.S. exchanges so U.S. investors are not funding the expansion of the CCP and its military.
I was shocked when I found out that our retirement for the federal government was invested in entities that were affiliated with the Chinese military-industrial complex. That's just wrong. We need Wall Street to wake up to this fact, and I think the only way they're going to do it is if they hear from investors. We don't want to fund entities affiliated with slave labor, and we don't want to help the Chinese military.
I 100% agree that delisting Chinese stocks needs to be a threat that is very clearly indicated to the Chinese government. I think that they need to understand that we will pull away.
Industrial complex, because that can be used against our men and women in the armed forces.
Again, you can't invest in a lot of U.S. stocks in the Chinese market. There are some funds you can touch, but they don't want a lot of money coming to us. I think we should use that as a weapon against them, too.
Joining me now in the Sunday Morning Futures exclusive is the Secretary of the Treasury, Scott Bessent. Mr. Secretary, it's great to see you this morning. Thanks very much for being here.
Morning, Maria. Always great to be with you.
Is China holding back rare earth magnets from companies tied to the U.S. military right now?
Yeah, Maria, I think that Wall Street Journal reporting is not very accurate. We haven't even finished the agreement, which we hope to have done by Thanksgiving. And I am confident that post our meeting in Korea between the two leaders, President Trump, President Xi, that China will honor their agreements. Xi Jinping has great respect for President Trump. The meeting was conducted very high level, and I am confident that they will honor their agreement. And if they don't, we have lots of levers. But to come out and say this before the agreement's even inked, I think is irresponsible.
Well, you told me after the meeting that you would likely have something signed the following week. We spoke right after that meeting in October. Are you saying that you do not expect the Chinese Communist Party to hold back rare earth minerals from military-related companies in America?
I am saying the agreement is that the magnets will flow freely as they did before April 4th.
Are you expecting them to resume the purchases of soybeans, or are they going to double-cross us on that as well?
Maria, we have lots of levers, and again, they've already started the purchases of soybeans. They've agreed for this buying season to buy 12 million tons, 25 million tons for the next 3 years after that, so a total of 87 million. And then we have lots of other trade agreements that call for soybean purchases. I do believe it's very unfortunate they made pawns out of our great soybean farmers, but we believe that we have remedied that. If you look, prices of soybeans are way up since the meeting in Korea. And I think they will honor this. And again, we have lots of levers too. Just like with the fentanyl, the president took off half the fentanyl tariff, 10%, and we are going to set up a dashboard of very quantitative metrics that they are going to have to meet to keep the tariffs off.
I know you have.
See, this is the thing I love, like looking at dashboards, looking at real-time data, and then holding people accountable for it. Like, why the fuck is the Fed not looking at real-time data in order to be able to determine where we're at? Why are they looking at things that are 30, 60, 90 days delayed as far as like any value that they have, because they're not even forward-looking to begin with? It's kind of crazy how archaic and how political the Fed is, and then people saying things like the Fed needs to remain independent. It's such an odd thing.
You have a lot of levers, Secretary, I'm sure of it. Is one of those levers removing Chinese stocks from U.S. exchanges? China needs the deep liquidity of our capital markets. You've got a lot of companies trading on U.S. exchanges right now. Some of them are actually on entity lists. So is that one of the levers you're going to pull if they say they're not going to send rare earth to our military-related companies?
Maria, all options are on the table, but I think we have to go into this believing that President Xi will keep his word to President Trump. But President Trump is the only president who could have negotiated this agreement. The Biden administration was missing for 4 years, and this is how we got here.
Okay. I want to move on to affordability, because this is another issue that the Biden administration brought you. Of course, we remember when inflation was at 40-year highs, President Trump has made this a priority. But suddenly there is more talk about the struggles in the cost of living. I spoke with the CEO of Omaha Steaks on Friday on Mornings with Maria, and here's what he told me. Watch this.
So we are headed for what I'm calling, Maria, the $10 a pound reality. By third quarter of 26, families are going to see $10 a pound ground beef in the grocery store. So we're in for a bit of a haul here. I don't believe we'll see price come down in any meaningful way until sometime in 2027.
Secretary, I know that President Trump has been able to rein in inflation, certainly the cost of some foods and energy. But what is your take on what you just heard? He's expecting $10 meat.
Well, Maria, the beef market is a very specialized market. It goes in long cycles, and this is the perfect storm. Again, something we inherited, and there's also, because of the mass immigration, a disease that we've been rid of in North America, made its way up through South America. As these migrants, they brought some of their cattle with them. So part of the problem is we've had to shut the border to Mexican beef because of this disease called the screwworm. So we're not going to let that get into our supply chain. And again, I don't want to focus on one product. It's a very important product, and we are laser focused on this issue. And the cost of living, Maria, is two parts. So we inherited this terrible inflation. We are flattening it out. I believe we're going to push it down. Energy prices are down. Interest rates are down. But the real thing that is...
Yeah, so here's the thing I want to just point out again, guys. Let's look at the price of beef. When did the price of beef get expensive? It did that in the pandemic at the height, right before the Fed raised rates at the most aggressive rate in history. Then it went way down and got June of 2024. It was way down here. But way before Trump got into office, let's just look at the price of beef. We went from $226 all the way up to $351. And then Trump, people are like, oh shit, Trump won the election. Beef prices go down, and now they're sitting right around here. So again, we can kind of see what the truth is here, and what Scott Bessent is saying is very, very true and accurate. Where the fuck is it? No, there we go. Is that him? Where did he go? Oh, he's on X. What am I thinking?
Going to happen that is going to give Americans real purchasing power increases. It's going to be through growth. We passed the one big beautiful bill. I am also the IRS commissioner, and I can see that working Americans, thanks to the president living up to his campaign promises, no tax on tips, no tax on overtime, no tax on Social Security, deductibility of auto loans. If you buy an American car, there are going to be substantial refunds in the first quarter of 26. Working Americans will change their withholdings, and they will get a bump up in their real incomes. So I would expect in the first 2 quarters, we are going to see the inflation curve bend down and the real income curve substantially accelerate. And when those 2 lines cross, Americans are going to feel it. But Maria, I will tell you what we're not going to do. What we're not going to do is tell the American people that they don't know how they're feeling, which is what the Biden administration did. They said it was a vibe session. You don't know how good you have it. And we are working every day to get these prices down.
So is this the president's response to these worries? He said on Friday he wants to perhaps lower tariffs on beef, on coffee, nuts, spices, and a dozen other agricultural foods. He's also talking about this new proposal to send $2,000 checks to average Americans. Now, does he need congressional approval to do that? But these 2 moves are, many people believe, in response to these worries about the cost of living.
Well, Maria, and again, this just didn't spring up. We've been working on it since day one. We've had executive orders that were done in January or February, and we've been working on it every day since the administration started. And the other thing, too, is like some of the products you listed, those are a result of we've been working on trade deals with Central and South American countries for 6, 7, 8 months. Right. And just this past week, we signed the trade deals. So not only will the tariffs come off some of the things you just listed, like coffee, like cocoa, many other bananas, many other items, that's a result of the trade deals going through. And then we will see this go down. And we're also seeing the import barriers for the other countries come through. So this is a complete trade policy, and now we are going to see it affect the prices.
Secretary, is he going to be sending these direct payments to Americans of $2,000 or more?
We will see. We need legislation for that. And again, President Trump is all about solutions, Maria. And everything is on the table. But I will tell you that, again, thanks to him keeping his campaign promises to working Americans with the working class, no tax and tips, Social Security, overtime, we are going to see a big bump in the first quarter with the refunds and the real incomes. President Trump has also talked about sending $2,000 refunds to, and that would be for working families will have an income limit. Those could go out. And then, Maria, the other thing that is going to happen in July, families are going to be able to apply for any child born from January 1st, 2026 for the next 3 years is going to get a Trump account. That's $1,000 for each newborn that's going to go in the stock market, and that's going to be invested for the next 18 years. So President Trump is committed to getting the money back to families.
I like that idea. Again, real quick, Secretary, what are you expecting from the Supreme Court? Tariffs have already brought you, what, $200 billion or so. If the Supreme Court goes against you in this upcoming decision, are you going to have to pay back, the U.S. government will have to pay back $200 billion in tariff revenue already collected? What's the backup plan?
Well, Maria, I want to say this in the strongest possible terms. I think that there are 3 points here. Is one, this is one of President Trump's signature policies, and traditionally the Supreme Court does not interfere with a president's signature policy. 2, this is an emergency authority, which is IEPA. President Trump has successfully used that. One, to, as we talked about earlier, on the rare earth problem, he threatened substantial tariffs on China, and that made the rare earths flow. Yes. 2, numerous of the peace deals that he's negotiated, he threatened to put tariffs on the countries, and that got us to the peace deal. 3, when we're talking about fentanyl, we had fentanyl tariffs, and what is more of an emergency than hundreds of thousands of Americans dying every year? No one had been able to get the Chinese to the table with these precursor drugs. Right. And then 3, I would push this back onto the Supreme Court. I don't think this ruling is going to go against us, but if it does, what's their plan for refunds? Because how is this going to get to consumers? Are they just going to hand some of these importers big windfalls? What if the exporters have given big discounts already, and then you're going to give a refund on the tariff, so they'd be making it on both sides. So I don't think the Supreme Court wants to wade into a mess like that.
Yep. When do you...
I agree. I think a lot of people have this wrong. I don't know what Kashi has it at right now, but I think that the Supreme Court, there's so much justification constitutionally, historically, and you can't argue that he hasn't been able to end wars, lower trade barriers with other countries, and push China with rare earth elements, something that they're using to weaponize against the United States. And even the concept of refunding tariffs is a fucking nightmare. I can't imagine the Supreme Court wants to be responsible for undoing that and the ramifications that come from it.
You think that the public is going to really
And again, Trump said he's got a plan B if nothing else, but I don't think it's something that can happen.
feel an impact from your moves to rein in the cost of living? How long will that take?
We'll finish this and we'll look at charts.
We're going to see a substantial acceleration in the economy in the second quarter, and I think we are all
reacceleration in Q1, Q2, guys.
Also, we're already seeing on many prices, as I said, we're bending that curve down, and the increase in real incomes, I think Americans are going to feel it in the first quarter, second quarter. I think 2026, thanks to President Trump's signature plans, is going to be a great year for working Americans, for the markets. I call it parallel prosperity. Main Street and Wall Street can both do great, but I think Main Street's going to have a great year in 2026.
Did the government shutdown set us back? Are you expecting a big hit to fourth quarter GDP as a result of the 43-day?
I do want to speak about something there. So he said that they can both do well together, but he thinks Main Street is going to do the best in 2026. So that's something Michael Howell talks about too, about how the real economy can do well when the stock market isn't necessarily doing well. So I am worried about something like that potentially in 2026, having a very boring, dull, lack of performance across markets because of high valuations. If there's anything I'm worried about, it's that.
Shut down, Treasury Secretary?
Maria, of course the government shutdown set us back. And look, it's terrible what the Democrats have done. They tried to stop President Trump in the courts. They run to the courts, the circuit courts, and join us. And then they lose at SCOTUS, so that didn't work. The legacy media, they tried to stop us with the legacy media. And then they did this terrible shutdown. For what reason? And we've got a 60-day reprieve here. And if they shut the government down again and refuse to negotiate, I'm 100% with the president. The Senate should go straight and forget the filibuster, and Republicans should vote to fund the government without the Democrats. I'm very happy to see 8 brave Democrats came across. But this economic damage is unacceptable. They call it self-harm. They were willing to harm the economy of the United States to benefit a party in chaos.
Yeah. Well, they want to have chaos.
To try and win a mayor in New York City who's literally can't do any of the things he's talking about doing because the governor isn't even supporting him. It's absolute insanity. So anyway, I think that's good. I do want to, real quickly here, I'm going to just we'll look at charts. We'll do that in a second. I'm just going to refresh here real quick, hit the restroom. Give me 1 minute, actually. And I'll be right back.
The opening print on this very busy week. A little weakness in Mag 7. You see NVIDIA, Tesla there, Palantir. Some weakness in Bitcoin below 94K. Strategy's a victim there, down almost 2%. But a lot is headed our way in the coming days between this resurgence of macro data, of course, and we'll be watching D.C. with the House back in action. Don't forget you can catch us anytime, anywhere. Just listen to and follow Let's Walk on the Street, Opening Bell Podcast.
At Les Schwab, you get more tires we design ourselves for the roads that you drive.
Need better sleep? We can help. Save up to $700 on Sealy at Mattress Firm. We make sleep easy.
As a nurse, you give 100%. At Post University, our 100% online nursing programs are 100% on your schedule. Apply now to go from RN to BSN in as little as 12 months. Learn more at post.edu.
From smart digital tools and competitive rates to personalized help on your home buying journey.
Thank you guys for being patient. I'm going to kill this. We're going to pull up some charts here real quick. Let me just move some things over. I don't think we care about the Japanese bond market right now, so I'm going to move that out of the way. Robinhood, it looks kind of double toppy, but it looks like it's breaking down too. Support, at least fib-wise, would probably be over here around the $100, 105 range. We did get a nice bounce last week, though, and I do think that banks and companies like Robinhood are ones that could do really well. Is Jesse gone? He's back. Left us for the commercial break. Yes, sir. And let's just hop over here real quick. So MicroStrategy, I actually think we're kind of finding a layer of support. This is the fib level. What I can do here, though, is I'll do a fib. We'll assume the top is in. I'll make, that's already a 1. I'll do a fib retracement here from where we were down at the bottom of the bear, all the way up here to the top that we experienced more recently. And so this gives you the levels. And the thing I want to point out here is, I mean, MicroStrategy kind of did already bottom. We're getting ready. Now, we could dip over here towards peak volumes, towards the 160-ish range, 170s, where we have peak volumes on the right. But we have overshot the .618 retracement level, which, again, is normally the golden retracement area. And this is like where you're most likely to bounce. we've already seen two-thirds of the price be removed from MicroStrategy from where it peaked earlier this year. So I don't know, man. I think, November of 2024. So technically a little over a year ago, right about a year ago, it's down 2/3 of what it was. So I don't know. This, to me, like this cascading drop that we just had from 290 all the way down to 192, when you lose a 30-year value in a very short period of time, like what was that? That was October. What was that? That was 2 weeks ago. So when you lose a 30-year value in 2 weeks, I would argue that that's probably the time where you should buy. James just wrote a NAV premium is now below 1. It's 0.93, right? And Chanos got out of his trade, didn't he? Am I right? I'm trying to remember. Some things are dreams and some things are reality. Didn't James like crush that trade and then close out of it? I think he did. So I would actually argue that MicroStrategy right now is kind of a beautiful buy. It's kind of a beautiful buy, in my opinion. Now, somebody asked about Palantir. Let me see. If you guys have other tickers, throw them out. So Palantir, what's a good buy zone for this? I struggle so much with Palantir. I love the company, but it's really hard for me to be like excited about telling people to buy something that technically went up 3,300% in a period of 2 years. Leaps? No. Why does everybody? I personally, man, I wouldn't be touching. I love leaps. If I'm going to do options, I'm doing leaps. Would I do them here? No, I still wouldn't do them here. I think that staying out of leverage where we're at right now, guys, is still where you want to be. MicroStrategy is still up 1,400%. It's almost 3x what Bitcoin did for performance based upon where we are now and from the bottom of the last cycle. So I struggle to even with leaps get excited about it with MicroStrategy, because again, if we go into a bear, MicroStrategy could draw down another 50%, just like Bitcoin. If that's true, do I think that's going to happen? No. Robinhood though, Palantir is tough. This is a tough one. It's been tough. It's tough to be like, oh yeah, hey, we're at the top. Technically, this could be the bounce zone right here. Kind of got near the fib, chops, goes up again. But again, the valuation's pretty high. If the growth slows down, they get hurt. Yeah, I don't know. I don't know if it's as strong of a narrative right now to me than what Tesla is. I think Tesla is a better buy. Let's look at Tesla. Tesla actually had a really strong bounce last week. I want to show that real fast since the market just opened. Ding, ding, ding. We're down 1% today, but I just got to say this, guys. Like, look at how far down Tesla. Tesla went down to 382 and then wicked up hard. Literally got back in above this downward trend level. So we kind of broke the trend like we've done with a lot of things. We broke lower. We did that with Bitcoin. We did that with MicroStrategy. We did that with a lot of things, a lot of investments. And then we broke back above it. Could it trade even lower now? Maybe. But I actually think that this was a pretty significant bounce that we saw here on Tesla. And again, if we're looking at, well, I mean, the daily isn't as good. The daily isn't quite oversold yet, but we're near a 40. That's quite a drop from where we were when we peaked over here on the RSI in September 16th, just from screaming higher from our breakout. To me, this would be a great point to consolidate. What we really want to see is getting above 433. If we get above 433, then we're above all the peak volumes, and it's a great sign that we're headed higher. Hood up 117% since you put me on it, but I don't know if I should take profits or keep holding. I like Robinhood and I like SoFi, but you're right, they've went up a lot over that period of time too. What is the actual valuation? Like what? Not that PE ratios are good right now for determining value. I don't think they really are, because companies are so international and their ability to be able to pull in funds has changed so much over the years. Let me see though. Why isn't this coming up? Come on, man. Robinhood. Maybe I got to type it right. Let me just wait here for a second. That's weird. I'm going to refresh again. Maybe this got disconnected. Do you think miners are allocating some of their power? That died. Okay, I'll do that later. Do you think they're allocating some of their power to AI? Could have a negative impact on BTC network? Not really. Not really. Because hash rate's still going to go up no matter what. Yeah, look at Tesla, guys. It's back above the fib. It looks a little bouncy here and like it's going higher. I got a feeling a lot of things are going to do that this morning. Palantir, negative 1.33. Again, this one is just, when you go up 3,400% in 2 years, I don't know, man. That seems sketchy. Nebius is getting a little bit of a bounce, 1.2%. What else do you guys want to look at? We looked at Robinhood. Any other charts that you guys want to pick up right now and take a look at? Let's see here. BMNR is still hurting. Again, the reason I'm not in BMNR, guys, I love Tom Lee, but the ability for this thing to fuck people like it did, or like the Bitcoin treasuries did, I think is very possible. Metaplanet up 1.7% today. Smarter Web only down 2. Solana 2X Fund down 1. So we're getting a little bit of a bounce. God, Upixi, the Solana fund or whatever, down 6.52, and DFDV down 2%. Strive down 0.4. Strive just went positive. It just flipped, actually, the second I said that. SoFi down 2%. EOS down 2.4. How are the miners doing? Iron down 0.5. They look like they're recovering. They got really fucked last week. I mean, guys, even Mike Alfred said this the other day about Mara. He's like, Mara got utterly destroyed, and boy, did it. We went from $23 down to $11. 55, 60% drops pretty much between CleanSpark and Mara. Just utterly brutal. Just destroyed my options contracts. I'm glad, though, that I was selling up here, man, because if you didn't sell any and you just maintained the element of greed in your mindset, boy, did you get fucked on CleanSpark as it dropped from 23.65 all the way down to 10. Just painful. What is an educated guess for Sol from here for the next 2 to 3 months? I don't know, dude. It depends so much on what happens with markets. We lost structure and Sol pretty good. And again, all the shit coins except for Zcash. That's the only one doing well. And that's not something you want to chase, in my opinion. But our right testicle here has been butchered. It is worse than my testicle looked before my surgery. ARCG and ASST, yeah, let's look here. Let's do ARCG first. I really like ARCG. Let's see if that one's going to recover. ARCG, again, it's underneath here. It looks like it bounced off the 100 weekly moving average. What I would like to see for ARCG is to get back above like 27.50 and really ideally get above 28.33. If we do that, and we do that over in short fashion, this will finally turn green, and a consolidation zone that went back to February will finally start to look good. I'm going to throw up TLTs while I'm here too. It's up 0.17. Didn't mean to do that. Not even sure how I got that up. Let's get rid of this. So this thing is still down from its high over 4 years ago. It is down 50% from that high. Or I'm sorry, not 4 years ago. What was the top? Or maybe it was. Yeah, 2020. Yeah, so over 4 years ago. We are consolidating a little bit here, but we have all these key resistance areas. To me, what we're seeing, it would be crazy to me if we didn't break up and at least get to the 110, 100 range by the middle of 2026. Because you could see here, you've got the confluence of resistance, right? You got one over here. You got one here. This thing is going to want to break higher. And maybe it takes months still for that to happen. But if I do good in other parts of the market, I'll probably add to this play if it just sits here and grinds for a while as it goes lower, because I do think it'll be a good hedge. I do think rates are meant to go lower. Sitting at 95.3 on Bitcoin right now, looking to go higher. What else did you want to see? It was ASST. Let's pull that up. Iron in the green, not super surprised by that. Up 2.31% right now, getting its bounce. And again, just looking at ASST in the green, up 1% right now too as well. I think we're more likely to go higher, guys. Again, we already looked at the RSI levels. They're absolutely butchered. If ASST goes up and closes the gap, I'm not saying it's doing that anytime soon. I'm saying maybe over the next year that we could see this. That would be a 650% increase. I think ASST Strive is a company that people are deeply discounting and at their own peril. I think it's going to do great. I think iron can still do really good. Again, it dropped hard, guys. Let's look at iron here. And then Cypher is another one that Mike Alford was talking about. But we saw a drop right to the fib. Look at this. Right to the fib. This is the fib extension. This thing dropped 41%. So, and looks like it's having an opportunity to bounce here. It looks like it's probably going to be pretty strong. And I don't know how violent it'll be, but it wouldn't surprise me if iron starts going up from here. Am I long term? Yeah, I probably will. I mean, if we have a downturn that lasts 3-6 months in Bitcoin, maybe even 9 months, I'm probably going to be stacking Strive. I'm not looking to sell it. I'm not in long calls in it. I've got over $250,000, I think, sitting in Strive, and I think it's a good long-term play. I really do. I think this is one you can hold. I think that there'll be an acquisition company. I love the fact that they're basically funding it from perps and trying to use virtually no equity from here on out, outside of the warrants that already exist. I do think there could be an overhang on Strive, though, which is what I want people to be clear about. I do think the warrants haven't all expired. They're not expiring for 11 months, and there's a decent amount of warrants that will create a lot of a dilution in the shares. But I think that's not as big of a deal as people think it is. I think the one thing that's kind of an overhang for Strive right now is the closing of the deal with Semler. I would like to see that close. I don't know how quickly it's happening. There's a shareholder lawsuit. They have this whole medical side of the business that was kind of messy. But if it all works out, then they could have positive cash flow coming from Semler, because they have had several quarters of that. And if they're able to get it to where there's a cash flow part of that business, and they've got their perps paying out 12%, and they have no debt right now at all, I think it could end up being pretty good for them. Right now, up like 0.23% on the day. Dario, closed out of a bunch of my positions and took profit. I'm expecting a red market in January, February, like last year. So I'm mainly staying in Tesla. I don't think that's a bad idea. I mean, MicroStrategy is pretty washed out. I'm staying in Metaplanet because it's washed out. It's up 3.38% right now. The Smarter Web Company's up too. I've got a much smaller position in that. I have added a little bit to it, but not much. But I love Metaplanet. I think Metaplanet, Strive, MSTR, I think all of these could do a lot better. Metaplanet already dropped 85%, and it had that weird messaging about like getting closed out of the Japanese market, or there being some worry about them. I don't think that's with them. If this thing actually went back up, and maybe this doesn't happen for 6 months or a year, when it closes all of its gaps, it's up 400%. And there is no real downside gaps, not in the American market. It's just been butchered. Up 4% on the day, so I think Metaplanet is probably a good hold in my in my opinion. And Dario, I don't think it's crazy that you've taken a bunch of profits. I do think there can be pain heading into next year. I think picking the washed out things, or the things that stand to drop a lot less, like Tesla and MicroStrategy, something that's already down, 2/3. That's probably the safer bet, in my opinion, honestly. I don't think that's crazy at all. All right, anyway, what else we got going on? I think that's probably it for me today, guys, unless there's anything else. CleanSpark we already looked at. I mean, it's just decimated, right? It dropped really hard. Let's look over here. What are we getting on ArcG? ArcG up 0.3%. Trying to get above that. I love that. If we can get above that trend line, I really, really would love to see that. Let's see. Where was CleanSpark? Iron. Maybe we were back a ways. Thought we already did it. Yeah, CleanSpark. So again, it's looking bouncy too. It was dropping into the morning. I mean, this thing, again, I wouldn't be surprised to see us break back above a trend that started in 2024 when CleanSpark topped, along with MicroStrategy and a lot of other things. I wouldn't be surprised to see us get back above that. Again, these guys are pivoting to HPC. I don't see any delays in HPC as far as like needing energy and access to it. And these guys are the guys that have that, and they can pivot away from Bitcoin mining and for a little bit and focus more on HPC. And I think that only helps them. And I don't think that does anything to harm the network at all. Maybe it slows down the hash rate for Bitcoin mining a little bit. To where it becomes more profitable again. That's probably like the worst impact, right? It's not like network security is going to get a lot worse. Anyway, but yeah, I think CleanSpark, a lot of the risk has been de-risked out of it because, again, it just plummeted off the face of the earth. Wish I would have sold fucking everything up here when I was on vacation because it dropped 55% and those calls all became absolutely worthless. They still have some value right now, but I lost a huge amount from that. My contracts that exist right now for CleanSpark are negative 240,000, but they were like at $1 million. So with the stuff that was still left after I was selling out like crazy. So I really wish I would have just butchered that and gotten rid of all of that and my Mara contracts because I didn't realize that we were just going to literally fall off a cliff, or metaphorically, I should say. Quick look at Mankind, $5 a share, Biofarm. I'm probably not going to right now, man. I got to go. It's almost 9 o'clock, and I've been doing this for a couple of hours already. So probably going to call it here. Maybe we can look at it next time, though. Love you guys. Hope you have a good rest of your day, and I hope the week, I hope Monday ends up being a turnaround day, just like we've seen in the past. Talk to you guys later. Stay out of trouble. And again, just I think stay away from leverage for now, guys. It's probably the best thing you can do.